Hello and good day. I am not uploading any video for a long time as my health didn't permit. For the new viewer, I would like to mention that I'm doing trading for the last 8 years from 2016. And during COVID, I have researched a lot. I tried a lot of strategy, but most of the case, I made some profit. Also, I made some losses. After doing everything for the last 3 months, I have decided to do something which I should stick to, because if I practice something again and again, it will create some age ultimately. So this video is mainly related to new traders. They should watch every episode because I'm going to upload every episode one by one with some potential trade, so they can understand, and I would explain why and how to take the trade. At last, I have decided to take the trade or do my trading based on Ichimoku Cloud. This is a Japanese indicator. Actually, it is a strategy, and this whole Ichimoku Cloud is very complex. But for the new traders, it is a self-sustaining system. And if we use some other few indicators with it, we can make the reliability of the Ichimoku Cloud strategy or trading system work for us. I am practicing this strategy in reality for the last 3 months, honestly speaking, and it is giving an average yield of 25% each month. And that is a very big profit if it is consistent, and I made $75 out of each $100. So before I start the Ichimoku Cloud system, I would like to explain 6 points here which are very important. One, you must have a lot of patience. So don't rush. If you rush, you will lose. Take that as guaranteed. If you get very aggressive in your trading, you may gain, but ultimately you will lose. This strategy or the strategies of Ichimoku Cloud will give you not more than 3 or 4 trades in each week. So you have to be very, you must have a lot of patience. 3 to 4 trades at best in each week. And third thing is this: in a whole month, you will get 12 to 16 trade. So guys, you understand there are more than excuse me, there are more than 25 pairs of forex trading and forex pair. So 12 16 trades will not be that much difficult to find, but if we increase the trade, then the quality of the trade will be degraded and we will lose money. Fourth thing, which is very important also, if you win 40% or the trade, you will be able to retain 25% of the investment. Fifth is, it is very much mandatory. The fifth point is, you must use stop loss, and in another way must observe the trade to create trading stop loss. And why the fifth point is mandatory? Because if we put the stop loss, we know what will be the loss scenario, and that way even we lose 60% of our trade. So if you lose 6 trade out of 10, even we know what will be the loss. At the same time, if we gain or win 40%, or it means 4 trade out of 10, we will know the potentiality of the trade. So ultimately it will be on the more positive side, even we win only 40%. I will show you why. And the last thing is this, that this Ichimoku system must be blended with a few other things to increase the probability of the trade in our favor. And the thing we'll use mainly support and resistance of different time frame, and to decide on our stop loss or trading stop, we will use the ATR value, average true range. The guys who doesn't know what is ATR, please find it out. I don't have any video on ATR. So these are the basic 6 points which you need to maintain all around, and you have to maintain these 6 points very strictly without any what I will say, without any compromise. Don't assume something. Don't take trade out of your emotion, out of your whim. If the stop loss is hit, it is loss. And if you lose stop loss consequently 6 times, even then it is okay. Ultimately you will gain. So these are the things which is very important. So I hope you will write this down, these 6 points, and memorize them, that you need to do these things, keep these things every time you take your trade, and that is the main thing. So let's get rid of this. This video I will just show you the basics, and in the second episode I will try to show you different strategy or how to take trades. So this is a pair AUD, Australian dollar and Japanese yen. First of all, we'll incorporate the support and resistance. So let us do it manually. Now we are currently in the monthly time frame. This is very important. So we can fix let me get rid of all these things. These are done to test certain strategy. So let me get rid of this. In month, we are going to find the support and resistance. The resistance is here, and let's mark it in red. And the other support we have monthly mainly here, because if we see here, we are considering almost 22 from 2022 to end of 2024, because today is 31st December. I am doing this video. So this is our monthly range, and these prices, this resistance, when we approach to this resistance, we have to understand that this is very significant resistance, and when we approach to this support, we will understand this is a very major support. Now coming back to weekly time frame, you see this weekly time frame now, and in this weekly time frame we'll create the weekly support and resistance. So let's put the weekly support, resistance is here, and we'll change it to, let's say, brick color. I don't know the exact name of it. Let's put it this color. And also we'll put the, what you say, the support will be here. This is our weekly, and I need to change it a little to lower pixel because it is getting very big fatty lines. Let's reduce them to a little bit. Okay, so it is done. Now we have our monthly resistance and support, we have our weekly resistance and support. Now we'll go to daily time frame. So this is our daily time frame, and if we want to put the daily resistance is somewhere here, we'll change it to blue line, and we will then do the support is here. So one thing, it is clear that the weekly resistance and monthly resistance, daily resistance is at the same level. So keep it in mind. We can incorporate a lot of indicator, but that will make it a more complex thing. So these are the mainly first initial thing in any pair you take. And by the way, the Ichimoku Kinko system works for forex, works for stocks, works for future, works for options, works for gold, oil, I mean commodity, anything you can put. It will give you the same message, or it can any pair or any stock, any future can be analyzed through this system. So we are adding all these support and resistance of different time frame, so it will give us some added advantage later. I will show you how. Now coming back to the Ichimoku Kinko, lots of people are daily traders. This video is not for them. Even they can do it, but mainly I don't do daily trading. I am mainly swing traders, or it can be work for structural trading, which it means that who takes trade for more than 6 months to 1 year time frame. But I do normally swing trading. Swing trading means from here to here maybe, or from here to here, something like this, or from here to here. This is called swing trading. But some people will love to do it structural. They can use the same analysis for structural trading. But for daily trading, hourly I don't do, and the minimum time frame I use is 4 hours. This is the 4 hours, and I don't have any support and resistance for 4 hours. I don't use that. But I take trade from 4 hours, of course. I use the lower time frame to be matched with, to be synced with the higher time frame, like daily, weekly, something like this. So one thing is done. Now Next thing is this, that we need to check out another thing is this. We will just remove the visibility of these lines from our not in all time frames. So let us remove them first, so that when we analyze or I describe the Ichimoku Kinko system, you can understand. So let me take them off from all, just to put them in minutes so we can bring them back later. So this is the guy which I have to remove. Only I will leave it only in minutes. Okay, the visibility will be only in minutes, so we can use them later back in our main chart along with Ichimoku Cloud. Sorry guys, it is taking a little bit long, but I'm taking it long so you understand how to do things in your own chart and analyze things properly. So all the support and resistance in all time frame is now invisible to all time frame except minutes. Okay, visibility. Okay. Now let us bring Ichimoku Kinko Hayo. So this is the Ichimoku Kinko Hayo thing, you can see, and it is so complex in appearance and so many things are going on. That's why some of the traders called it a system within a system itself. But we will analyze the thing one by one so we understand what is going on. So first of all, we'll remove most of the thing from visibility and we will just analyze one by one. The first one, there are the lines, the name of the lines are conversion line, base line, lagging span, leading span A, leading span B, and the formation of cloud. Just look into these things. Don't see anything else. You don't need to. No point. Just 1, 2, 3, 4, 5. This 5 will be more than enough to understand. So we are going to take out all these things now, even the cloud. This is called conversion line. This conversion line, or it is the fast line, actually a 9-period moving average, but this 9-period moving average is calculated in a different way, so we are not going to the calculation part. We are going to concentrate only on the functionality of this conversion line or fast line. This is the blue one, is called the conversion line. So this line shows very clearly the price movement, and it is very quick responsive to the change of price. So this is conversion line. The second line we are going to use is called baseline. This baseline, if you go to the input, you see conversion line is 9, baseline is 26. So this yellow marked line is the baseline, which is 26 period moving average, and its response to the change of time is slower than the conversion line, I mean the blue line. So this is another line we need to learn. You can see if the price changes here, still the yellow line does not change until it has a significant change in the price, whereas the blue line is changing very fast. So it is 9-period average. Any time frame we take in that particular time frame, it will be 9-period average, moving average, and the yellow one is the 26-period average. Coming to the next thing is we want to see is the leading span A and leading span B. So these two lines are basically the 52 period moving average. But there is a uniqueness of this line that it creates, from the current price, it creates the line 26 period on the front of the future, and from the previous 26 periods. So this point is anticipated 26 period forward. The price is not still, because if we see the cursor, you can see it is showing on 3rd February 25th, you see, but the price is still on 30th December 2024. So it is forward by 26 period. And if we enable the cloud now, this is the cloud plot background. So if we enable it, you can see the cloud. This is called the Ichimoku Cloud. And this Ichimoku Cloud is a very powerful thing which gives us the essence of the future price, where it can be. And at the same time, this cloud gives us a very clear indication of the market is bullish or bearish. If the cloud is, if the price is above the cloud, we take the market as bullish, and if the price is below the, you can see here, it is the thing. If the price is above the cloud, it gives us the clear indication of being bullish, and if the cloud price is below the cloud, we take it as bearish. So one thing we can decide that, let's put it one by one in context so we don't forget. One thing is this, we have to understand. One, price above the cloud indicates bullish. So the biggest issue for the beginner, the traders, the beginners traders, is that they don't understand or may not be able to comprehend the market trend. And this Ichimoku Cloud gives us that age very clearly. So price above the cloud, so the price, if we see the price is above the cloud, it gives us the indication that the market is still bullish. And second, price below the cloud indicates bearish. So if the price is below the cloud, we treat the market as bearish market. You understand? I hope you are, it is very clear. So these are the basic framework of this Ichimoku Kinko, which helps the beginners traders a lot to understand. We don't need to know how these clouds are formed and what is this green line is called, though it is called leading span A, and this one, the red one, is called leading span B. We don't need to know all these things, but all we want to know is if the price is above the cloud, it is bullish, and if the cloud is below the cloud, it is bearish. So these two things are decided very clearly. So this is number one. Number two things is this conversion line, the blue line and the yellow line, the base line, These give us the point of entry and exit. This is very vital lines also, because how do we know where to put the stop loss, or how to trail the stop loss? I hope you guys do understand trailing stop loss. If not, search any YouTube video, you will find what is trailing stop loss. So as long as the blue line is above the conversion line is above the yellow line, we are safe on bullish. So the price is above the cloud indicates the bullishness of the market that we have learned. And now the third thing is coming here. We can put that the conversion line, let's not put conversion, the baseline yellow one must be above the cloud. And fourth is the baseline word should be a single word. So and the conversion line, the blue line, the conversion or the fast line which moves very fast, blue one must be above the cloud and the baseline. It means that if we consider the thing, let's put it here a little bit here or here. Okay. So price above the cloud indicates bullishness, price below the cloud indicates bearishness. That is two rules to find the trend, bullish trend and bearish trend. And the baseline yellow one must be above the cloud. So this yellow line should be above the cloud to confirm the bullish trend. Okay, let's not put in this way. Let me remove this number 2. Let's make it like this. I think that is the best thing to do. So we'll discuss the bearishness later. Let's not discuss together. Let's put it number 2 and this is number 3. Price above the cloud indicates bullish. The baseline yellow one must be above the cloud, indicates bullish, and the conversion line must be above the cloud and the baseline BULL. Sorry guys, I'm a little bit slow. Indicating. Okay, forget the grammar now. The conversion, the blue one must be above the cloud and the baseline, I mean the yellow line, this. So these are the first three criteria we must meet to take any bullish trade. Plain and simple thing. This is very plain and simple. In case of, to be more, it gives the more probability to take bullish trade, we must make sure that the cloud has started to be green. How I can show you that? That is not easy to show, because let me show you here. So you guys can see this is red, okay? So if we get back 26 period of this here, let's assume these price are not here, we are here somewhere. So you can see that it is not still the yellow, I mean the baseline is inside the cloud, the blue line, the conversion line is inside the cloud. But here we can see the yellow line is above the cloud and the conversion line, baseline yellow, I mean baseline is above the cloud and the blue line is above the cloud. And at the same time, the cloud must form this yellow, I mean the green formation. If it is red, we cannot take red. So you will see that it will start at getting green and green and green, you can see. I hope you guys understand. Like this, you see the transformation here. It was red, then it started opening to green. Again, if we move forward, you have seen that the price is coming down, and here the cloud has started from being green to red. This was the opening. So you can see, you will find something like this here, or maybe something like this here, a opening like this. So if we put that, the cloud must be, if we put the fourth condition is the forward cloud must be starting to be green. So this is another confirmation. Let me try some other, if we can find something which is forming just right now. For you can see here, just forming to be green in forward. 26 days forward, it is in day time frame we are here, it is just turning into green. And still we cannot take trade here, this GBP JPY. Why? In day time frame we cannot take the trade because the baseline is inside the cloud, though the blue line, the conversion line is above the cloud, but the baseline is still inside the green, inside the cloud. So once this one goes, crosses above the cloud. So first of all, that we need the cloud to be, the price has to be above the cloud. So it is, condition 1 is fulfilled. The second condition was this, is that the baseline must be above the cloud, which is not here present. And the third condition is the blue line, conversion line must be above the baseline and the cloud. It is the blue line, but we can see the baseline is not above the cloud, it is inside the cloud. And the fourth condition, the cloud must be green. So coming back here, these are the 4 conditions we have put. Price above the cloud indicates bullish. The baseline yellow one must be above the cloud, indicates bullish. The conversion, the blue line must be above the cloud and the baseline. And the forward cloud must be starting to be green. Or either it will start to be green or it has to be green. So these are the basic 4 conditions where we go long or we buy the stock or we go long in forex trading. These are the basic. Okay, these are the basic, and we must maintain these things. If we see trade like this, as we have seen in GBP JPY, this is green, bullish, the price is above the cloud, bullish. The conversion line, the fast line, the blue one is above the cloud, bullish, but the baseline is restricting us from taking the trade, as it is not above the cloud. So it will be an invalid trade. Okay guys, it will be an invalid trade. So this is the first thing. These 4 rules is applied in a reverse way. If we see this, these are the same thing. These 4 rules will apply for the bearish one also. So if we write the bearish one, let's say if we want to write the bearish one here, at the same time the price below the cloud indicates bearish, the baseline yellow one must be below the cloud, the conversion blue one must be below the cloud and the baseline, just reverse, okay, of the bullish, below the cloud and the baseline. The fourth one, the forward cloud must be starting to be red. So these are the fundamental these are the fundamental 2 things. Not a good color to show. Let me choose another. Yes. So to take long, we must follow this. To take short, we must follow this. So these are the basic framework which we need to always maintain. Any violation of these rules can you may make some profit, but ultimate result you will lose the trade. If you take 100 trades, you will lose that. Your account will be negative. And the last line we have to consider is called the lagging span or lagging line, and I'm going to activate it now. This one, this purple one. Now, what is the function of this purple one? The functionality of the purple one is showing 26 period back. So if you count from here, let me increase it so you can have a better understanding. It is showing the price 26 period back. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. So this price is indicating 26 period back price. So what is the interpretation of it? The interpretation of this, that to take a bullish trade, this 26 period back price, this price must be above this price. I hope you will get a little bit confused, but let me draw it out for you. Okay. No, this is not the right thing. I want to, let's put it how to, what can I do? Okay. This price and this price, 26 period back, this price and this line has to be synced. And how it needs to be synced? This lagging line, 26 period back, for bullish trade, it has to be on the top of this price. This price, this line must be the end of this line. I mean, this point must be above the price. And for bearish trade, it must be below the price. Below means below the price. So if we see now that let's consider this exactly in day time frame. uh, the price is below the uh, cloud, so it is bearish, but the baseline is still inside the cloud, whereas the conversion line is below the price, below the cloud, and below the baseline. But the only drawback we had here is that still the baseline is inside the cloud. It is not below the cloud. That's why we are not taking any bearish trade. We all the primary four condition is not fulfilled, and it also complied that the lagging span, this line is below the price of the 26th period price, and this line is below that particular 26th period back price. So if we want to put the fifth condition here for the long trade, we should put the lagging span, if they call it span, you can call it line, whatever it is. This is the purple one, must be above the 26th period back price. And if we do the same here, and the fifth primary to take bearish or shorting something, the lagging span purple one must be below the 26th period back price. I beg your pardon. So here in OZ JPY we can see, let's bring it here so we can explain it in a better context here. If we bring it here, then you will be able to understand it more easily. Primary price below the cloud, I can put it in a better context now, as I have already explained to you. Let's put it taking short trade, and this one, if we want to take short trade, I make it red now, shorting a trade or shorting a stock. So taking short trade, price, now I am making it mandatory, okay, must be below the cloud. So indicating bearish, I am going to remove this. It is not required anything, because if the price is below the cloud, it is bearish. If the price is above the cloud, it is bullish. But to take a trade, price must be below the cloud. So we can see this is, here is the cloud and the price is below the cloud. You can see, okay. The baseline yellow one must be below the cloud. So again, we don't need to put indicates bearishness or bullishness, whatever it is. So here we can see the baseline, this yellow one is not below the cloud. Can you guys see or not? I don't know. The yellow line is still inside the cloud. So the second mandatory requirement is not fulfilled properly. The baseline must be below the cloud, okay. The third condition, the conversion line, the blue one, must be below the cloud and the baseline. So the blue one, the conversion line is below this cloud and below the baseline, which is the yellow one. The forward cloud must be starting to be red or 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 red. Okay, either it must be starting to be red or it has to be red. Okay, I should post these two words in capital so no way you can get confused. The forward cloud must be starting to be red or must be red. So this is the forward cloud. And the fifth primary rule for engaging into taking short trade is the lagging span. Where is our lagging span? This purple line, okay? This is 26th period back, and the 26th period back the price is you can say we can this is the price, this guy is the price, okay? Sorry, not this one. Let me increase it a lot, zoom it a lot so you guys can see it clearly. Hold on, let me bring it here. So this is our lagging line, this one is our lagging line. Let me remove this guy first so you can understand. This one, the 26th period back, the lagging span, purple one, so this is our purple one, okay? And this is our purple one. Hold on, I'm making things more complicated without any reason. Delete. If I take it and I want to draw it, this guy, this 26th period, this one I want to make it, hold on guys, I want to make it white. So this guy must be, the lagging span purple one must be below the 26th period. So what is 26th period? This is the 26th period price, this green candle you can see. So this lagging span must be below this price, and it is gone. So why we are not taking the trade? If I ask you guys, can you understand or can you reply? Think for a while. The reason we are not taking this trade is due to this second condition is not fulfilled. The second condition is what? The baseline, the yellow one must be below the cloud, but it is not still below the cloud. So that's it for this episode, and it is very important to understand all these 5 points for taking short trade. And we'll do the same thing if we, sorry, that's not for all today. Let's taking long trade. So for taking long trade, here if we want to take the long trade, let's bring it here, this guy here, I think that is better to understand. Here you can see that at this point if the price was here for this candle, you can see that the cloud is green, the baseline is above the cloud, so the price must be above the cloud, indicating bullish is not required anymore. So if we consider this candle, you can see the price was above the cloud. Okay, so first condition is the baseline yellow one must be above the cloud. Again, I have to make it capital. Must be above the cloud. We don't need this one anymore. So the yellow one, as far as here this candle, if we consider this green one after this red one, the baseline was above the cloud. The conversion, I mean this blue line, considering this candle, must be above the cloud and the baseline. It was above the cloud, but it was below the conversion baseline. I mean the conversion line was below the baseline. The blue line was sorry, I beg your pardon, below the yellow line. So this third condition, there is two part, above the cloud and above the baseline. It must be above the cloud, and at the same time it must be above the cloud and the baseline, but it was not considering this candle, and we cannot take trade. The forward cloud must be starting to be green. So if we are considering this candle, so if we count 26 candle here, and this was already green. It started green from here, or from you will find that a 26 period above, we will see that it was already green. And the lagging span, purple one must be above the 26 period back. So the lagging must be the lagging line, the lagging span must be above the 26th period, 26th period back price. So if considering this, we have to count 26, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. So the lagging span, this is the 26th candle we had at that time, and it was below, the price was below the lagging span, you can see. So we couldn't take the trade for this candle for not complying the third condition. All the rest four conditions were fulfilled. So these are the primary instruction which must be maintained very toughly and must be implemented without any doubt. In the next video, I will discuss how to put the stop loss and how to observe and make the trailing stop, so we can even we win 40% of our trade. It means if we have 12 trades in the whole month, we have only 5 trades, 40% will be roughly 5 trades. If we win 5 trades, even then how do we make money even losing 7 trades? That's it for today, for this video. This will be episode 1 of Ichimoku Cloud. Next video we'll discuss about, one is stop loss, second trailing stop, and if we have cleared those things out, maybe considering the time, we'll discuss how we can implement them with different strategy with different time frame. Not time frame, basically how we can sync different time frame to bring the probability of the trade in our favor. And also we'll try to see to enabling the support and resistance we have made in this video, to understand that how those support and resistance of different time frame of month, week and days, we can come out of the trade or take the trade, all these things. The more you practice, the more you learn. And initially I was lost 3 months back, doing all other strategies like MACD, like RSI, like Bollinger Band. But this, what I have learned for the last 3 months, and especially implementing them for the last 3 months, has given me a roughly net profit of 75% of my total investment. One of the thing all of the viewers sometimes ask, if I'm making profit out, why I need to share this strategy? The simple answer is, if you make profit, my profit is not going away. I make my own profit, you can make your own profit, and this cake, the pie is so big that even if you earn profit, I don't lose mine. But sharing my knowledge may help a passive income of yours, and that may enlighten your way of life and doing other things. Thank you for watching. If you like the video, please do give a thumbs up, and I really appreciate if you subscribe, because ultimately it reflects the quality of the video I make. Thank you very much, and have a good day and Happy New Year.